Welcome to Finance with Avon. In this video, I want to give an overview and analysis of NRG Energy stock, ticker symbol NRG. Now, NRG Energy is an American energy company headquartered in Houston, Texas, and they are involved in the generation, distribution, and sale of energy and energy-related products, and their portfolio includes coal generation, natural gas generation, oil generation, nuclear energy generation, wind generation, solar energy generation, and much more. And since 2009, they've increased their focus on renewable energy, also known as green energy. And they definitely have a focus on sustainability with their energy generation and providing it to customers via retail and business. And NRG Energy has acquired 11 other energy companies, both generation and retail, that include Green Mountain Energy, Reliant Energy, Stream Energy, and more. And NRG has increased their dividend 4 times in the last 5 years consecutively. They had an area in here, let's go back over here, I'll show you, where they had the dividend increasing right here, as you see, from 2012 to 2013, 2014, goes up there 15 cents a share, and then it dropped down to 3 cents a share in 2016. And the 3 cents per share dividend went on for a couple of years, but then in 2020 they increased the dividend from 3 cents a share to 30 cents a share, and then in 2021 to 33 cents per share, then in 2022 35 cents per share, and then in 2023 38 cents per share, which is like 0.377 cents per share, so just round it up to 38 cents per share. So they have 4 consecutive years of dividend increases, and they have a payout ratio of 48%. So they're paying out 48% basically of their earnings via dividends. So that's somewhat safe right there. You know, I like to, of course, see payout ratios in the 20s and 30s sometimes. You know, that way it shows me like, oh yeah, they could easily cover that dividend right there with their earnings, you know, cash flow. But 48% is not that bad. In the energy sector, you do sometimes see the higher payout ratios in that kind of area of 50%, 40%, 60%. So it's not that alarming right there with the payout ratio of 48%. The dividend growth 1 year, 7.78%. The CAGR 3-year dividend growth is at 30.15%. The 5 years at 64.72%, and the 10-year at 14.07%. So like I said, not a lot of years of dividend growth. You saw that like 3 cents per share, but they really increased it all the way up to that 30 cents per share. That's what really created that growth right there. So it's like, can they keep doing that every now and then? Can they, you know, raise it a few cents here and there and then raise it really higher, or keep a consistent amount that they're raising, you know, 5 cents per share, 3 cents per share, 4 cents per share. Let me slow down. Sorry. That's one thing I'm working on. I'm trying to work on slowing down. I apologize. Sometimes I do talk fast, or it's in me in general. I do in general. So I'm trying to be more aware of that with these videos. So yeah, so if they increase it a few cents per share here, something consistent that's nice, you know, it would be nice to see from this company. And as of now, it's stated that NRG will be reporting earnings on August 3rd, 2023. And with their last earnings that was announced on April 5th, 2023, NRG missed the earnings per share by 49 cents. However, they beat the revenue expectations by 4.93 billion. And with the earnings for the past 2 years, they've beat the EPS earnings per share estimates 4 times. They've missed it 4 times, and they beat the revenue estimates 2 times and missed on the revenue expectations 6 times. And they recently had an activist investor, Elliott Management, that's trying to oust the current CEO of NRG. So they have some shakeups, some things definitely going on internally. And in May, right here, the activist investor Elliott unveiled a plan to create about $5 billion in shareholder value for NRG, including a strategic review of its $5.2 billion acquisition of Vivint in 2022, which he called the single worst deal in power and utility sectors in the past decade. So yeah, there's definitely some issues going on with NRG and the activist investor and that acquisition that happened back in 2022. Definitely some disapproval with that, and that's been reflected in the stock price with NRG for the past year. It's just been bouncing up and down right here. It's currently up for the year to date around 15%, but it's definitely had some moments where it's just been bouncing kind of around right there. And then for a whole year, it's only up about 3%. For 3 years, it's up 9%. 5 year up 16%, and for the lifetime of the stock right here, it's up 236%. So that's from back in 2004, I believe, 2003, right then 2003. But it's definitely had some nice growth. It has some like moments, like you can see in that chart for sure, the bouncing up and down. But it's definitely had some nice growth. Like I say, it doesn't have as much history with this dividend and everything, but it's one that I've just been growing my position in. I've had this held this company for the past couple of years and received some nice dividends for them for sure. And for me, my average cost of this stock is $35.60, and I haven't bought any since May, but it's definitely one that I'm having my radar on. I'm having it locked right now. Like I said, it's trading around $36, $37 a share. I wish it really would come down a little bit more closer to my average cost. I want to bring that average cost down, of course, but it is one I think I'm going to start adding more to right here in July, just in case if it runs up higher right here above 40. And according to the Snowflake analysis at the Simply Wall Street site for NRG, they state it's a reasonable growth potential and fair value. And they state that the earnings are forecast to grow 49.77% per year, and that it's trading at a good value compared to its peers in industry. So in that utility, power company industry. And with NRG kind of sticking out as undervalued related to its peers, I'll show you what they mean by that. One way that you can analyze the stock to see if it's undervalued is by looking at its PE ratio, its price to earnings ratio. And now NRG Energy has a price to earnings ratio of 6.44%. All right, it's definitely on the lower end right there. And having a low PE like this in the single digits doesn't mean that a stock is automatically undervalued or value stock. You definitely have to look at the financials more to get a bigger picture of what's going on. But NRG Energy has that PE ratio of 6.44%. Now let's compare this to some of its peers in the industry right here. So NextEra Energy, NEE, has a PE ratio of 18.41%, and Duke Energy has a PE ratio of 19%, and Dominion Energy has a PE ratio of 37.88%. Southern Energy has a PE ratio of 23.65%. So as you see, just comparing these 5 major energy companies right here, NRG is on the lower end for sure when it comes to their price to earnings ratio. So that's why you'll have different articles or, analysis stating that NRG is undervalued compared to its peers, or, on the value side when compared to its peers, or trading cheaper than compared to its peers, or something like that. You just have people that notate it and say it different ways like that. And one way that you can notate that and kind of see where a company is trading compared to its peers, other companies, in the same sector, is by looking at that PE ratio. So NRG Energy definitely has a lower PE ratio than other companies. So sometimes that can tell you like, hey, this is trading cheaper, trading at more of a value compared to some of the other companies in the sector. If you're looking for a value stock in the certain sector right there, that's one way of comparing it. So yeah, NRG Energy definitely has a lower PE right there at 6.44% currently, where the stock is trading at $37.32 as of recording of this section of the video. And according to the risk analysis for NRG on this website, the debt is not well covered by operating cash flow, and they stated the dividend of 4.15% is not well covered by earnings or cash flow. But let's check out the financials here of NRG. All right, so you see some single digit growth right here year over year, 9 billion in revenue hanging out. And then the past couple of years, see 3-digit right there, from 9 billion to 26 billion in revenue, and then from 26 billion to 31 billion in revenue, 16% year over year growth. And you see the profits increasing right here, staying in line at that 2 billion. And then they start to show some real promise right there, going up to 6 billion. And then the last year down to 4 billion right here. And you see the operating expenses. And so you see some negatives right here. And that acquisition was something that's standing out with them as well, as presenting as a negative, it seems, to a lot of people. So it's and then you have the gross margins right here. We're at 20-something%, looking pretty decent, really nice. And then it comes down to 12.99%. And as you see, just as a comparison to some of the other major energy sectors that are somewhat related to NRG, I've got ticker symbol D right here, Dominion, ticker symbol DUK, Duke Energy, and ticker symbol NEE, NextEra Energy. And as you see the revenue right there, NRG, the previous revenue, 31.54 billion, with Dominion at 17.17 billion, Duke at 28.77 billion, and NextEra Energy at 20.96 billion. And so yeah, NRG is definitely bringing in a lot of revenue for themselves, and of course compared to other major energy companies. And you see the operating expenses right here, 2.8 billion in operating expenses for NRG, higher operating expenses for Dominion at 15 billion and Duke Energy at 12 billion. And something's off right here with an NEE at 0 right there. And you get their operating income at 2.02 billion for NRG, Dominion at 1.60 billion, Duke Energy at 6.01 billion, and NextEra Energy at 4.08 billion. Let's jump over to the institutional investing. Institutional investors decreased their holdings by 0.43% last quarter. Not a lot, but you see kind of how it was a little bit higher and it kind of start to come down right here. So that's a little interesting right there. And top shareholders, of course, the main ones right here, Vanguard, BlackRock, State Street, Invesco. Top buyers have been Barclays, UBS, a couple of others right here, Prudential, some I've heard of, BlackRock, some I don't know, not that familiar with, AQR Capital. And you have some sellers right here, Citadel Advisors, Janus, Henderson, Jane Street Capital, and new shareholders right here, and exited shareholders. Just something I do like to look at institutional bonds just to see where it's kind of headed right here. And it could provide an opportunity right here with the stock. Like I said, it's decreased a little bit, but that stock price is not reacting in some ways like I thought it would. With you have that drop right here. It was up above 40. That's what I mean. This stock was hanging out up above 40 sometimes right here. And then it dips down in this mid 30 something mark right here. And it goes back up. Right now it's kind of struggling, showing some resistance to get back up to that $40, area right there per share price. But it's definitely been there bouncing around. I've been catching it. I think every time I've bought it, it's been in the 30s somewhere. Like, I don't think I've ever bought it above 40, maybe, but like my average price, of course, is around $35 per share. At times I have been up higher when it was around, 40 something dollars per share. Yeah, I was up better, of course, but I didn't realize those gains. Those are unrealized gains because I didn't sell for a profit. I just held on. So, and let's go over to the analyst right here. You got 11 analysts on MSN Money with an average hold recommendation right here. You have 3 strong buys, 7 holds, so 1 strong sell, a 12-month price target of $40.67. And let's go over to Tip Ranks analyst forecast. Got 5 analyst forecasts, average 12-month forecast of $42.25, highest price target of $45, lowest price target of $40. So all of that is higher than where it's currently trading at. One of the reasons why I have this stock in my portfolio is not just because of the dividend, it is because it is a utility company that's focused on sustainability. Because I wanted to add more of that to my portfolio a couple years ago. I was pretty much lacking in the energy sector in general, and I wanted to add energy, and I wanted to add sustainable energy. So, and I have had another one of the big companies in that area right there, NEE, ticker symbol, NextEra Energy. That one in a different portfolio, but in this one right here, I didn't have anything like that. So I wanted to add one. I think I was just researching different ones, and I really got attracted to NRG Energy because of some of the things they've changed up. And they changed their CEO. They're trying to see like they're heading in the right direction with the sustainability and what they're focused on with their company. And the dividend was nice. So I started adding it a couple years ago, and I still have it in my portfolio. Like I said, still wanted to definitely check out the news for. Like I said, they've definitely got some things going on right here currently in the news. Not a ton of news right there. Like I said, that was a few weeks ago, and then back in May right there going on with the Activist Investor. But I'm really interested to see how that's going to turn out. He also just recently had declared a dividend, 37 cents per share right there, which stays in line with the previous amount right there. Payable date is going to be August 15th for shareholders on record of August 1st. So the ex-dividend date is going to be July 31st of 2023. And that is it with my video on NRG Energy, ticker symbol NRG. Hope you all enjoyed the video. Take care.